Let no feeling of discouragement prey upon you, and in the end, you are sure to succeed. Abraham Lincoln. Well, my friends, 10 to 15 minutes a day, we're here to encourage you every day to follow the stock charts. The four with us, any other stock charts you are interested in. We also throw in Bitcoin if you are interested in that. 10 to 15 minutes a day is all we ask, but it's got to be every day so you can learn the nuances of the stocks and ETFs that you track. We track four, the S&P 500, the NASDAQ 100, both of those down today. 20-year bonds up, gold down, and Bitcoin, which we've thrown in here lately for you, it is down as, again, our charts are telling us it should be. Now let's jump into the S&P 500 first. Remember the overhang that we have been talking about. We had that weekly vertical crossover. They don't happen for no reason. It happened back on the week ending February the 26th. The next week it was down. Over the last 2 weeks, the prior 2 weeks, it continued to push its way up. Now we see that the derivative oscillator is about flat. That price percent oscillator is still negative, pulling away from the red signal line. What's this telling us? It's telling us if we drew a line up here, we can see that it's hitting the same spots it was hitting back on the 19th of February when it started to roll over. What is it doing? The market perhaps is topping out, is again pushing up around the same areas where it did before. Now, is it simply digesting gains like we saw it do back in the months of September and October and then booming up again? Could be. Or it could be coming to an end. We don't know. We just know that the overall energy is still down as witnessed by our price percent oscillator, our lagging indicator. It is a percentage version of the MACD. Many reasons we like it better than the MACD. And of course, you want to explore it in depth. We've got a whole chapter in our book, Charting Your Way to Wealth. Follow the link in the show notes. If you want to support the work we do here, we'll send you an autographed copy. Derivative oscillator, which is a triple smooth version of the relative strength index, a leading indicator, it also is down and holding about the same. So we'll continue to watch, wait and see. We have a red open box, little open box candle. See, most of the movement is up on that, but it's still a slowdown in those prior 2 weeks up movements. So we'll continue to watch and see. Not down a great deal for the day, 0.79%. Now we look at the 2-day chart. We had a 2-day crossover back on Friday going down. And of course, now it's not, again, it is a 2-day recross going down. It's a crossover. It's going in the same direction after a pullback as the weekly. That, of course, as we talked about on Friday, is a potential jumping in point for a 2-day recross. Things are moving in the correct direction there. Price percent oscillator is pulling away from the red signal line. Derivative oscillator has flipped over and is now gone from positive to negative. So this candle is now closed. It's a red spinning top. Fair bit of down movement there, a little bit of up movement too. We go to the half day, and of course we can see where things cranked over at the end of the day. A doji at the beginning of the day, some indecision, sideways sliding, and then cranking over in the afternoon. Derivative oscillator gaining momentum. Price percent oscillator pulling away from the red signal line. So that's where we are on the S&P 500. Let's go to the NASDAQ 100 as represented by QQQ. What do we see there? Still negative, heading down. Again, losing a little bit of that downward push, but still moving down. Derivative oscillator losing a little bit of downward momentum. We see that the Qs is down about half of what the S&P was, down 0.44%. We have a green open box candle, a very small one forming with a wick on top. Again, we still have this overall downward push from price, both on our price percent oscillator and on our derivative oscillator. Both of them are still negative. Now we go to the 2-day. Check out what's going on here. It's lost a little bit of that downward angle. Price percent oscillators lost downward momentum too. We ended with a green up candle, a very small one, still some significant movement on top, but more of a sideways slide. As we look at the half day, you can see where things had peaked, the latest peak back on the 16th, Tuesday the 16th of March, and then sliding sideways down, popping back up, and then over the course of the day, moving up some in the morning, losing that in the afternoon. So again, still positive. Price percent oscillator went positive. Derivative oscillator went positive at the end of the day. Price percent oscillator moving down a little bit. So again, the Qs, same thing we're seeing with the S&P. What is happening here? Still lots of downward pressure. 3 weeks of strong down movement. Last week, some indecision. This week, little bit of movement trying to recover, but that price percent oscillator still with that negative weight. So we'll continue to watch, see how these things sort their way out. Now we leave stocks, we go to bonds, and of course we have that solid green candle. It's a slowdown in the down movement right there, just sitting there a little above. A little above the weekly trend line. And look how much we have seen bonds since that 2-day recross back in February just continue to move down. We see lately, though, the price percent oscillator flattening, derivative oscillator for the first time in many, many weeks. We see it starting to lose some downward momentum. Again, up for the day, 0.90%. 2-day chart. We see the price percent oscillator still negative, but heading up. Derivative oscillators flipped over positive, and a green open box candle pushing through the 2-day trend line. Now we've seen that happen where things, you lose energy and then bonds pop up a little bit and then down again and sort of settle out and down again. We'll just continue to watch, wait and see. 2-day hasn't crossed over yet. It could. We'll continue to watch, see how that moves. And what do we see on the half-day chart? Well, strong movement on Monday morning, heading up. Monday afternoon, Tuesday morning, Tuesday afternoon. So we'll continue to watch, wait and see. Prices pushed through. That was back on Monday afternoon. The 2-day trend line heading up toward the weekly. So we'll continue to watch and see how bonds continue to move. Of course, bonds have been beautiful for us since we had that 2-day recross going down. Of course, if it does cross back over, that would be your final signal to go ahead and pull back on that trade if you are still in it. If you didn't cash out back on perhaps the 25th of February or maybe over the last 6 days, again, no reason to have to do that, but as you see things potentially coming to an end, do pay attention to that in your practice trade. We always give that caveat. We're not a stock calling service. We're an education firm. Let's move on to gold. Gold was down for the day, 0.73%. Now, gold, of course, has been going down since that weekly vertical crossover. We've seen some changes along the way, but the weekly vertical crossover back on September the 11th went down strong the week after the weekly, 2 weeks after the weekly vertical crossover, then sideways, down again, then up for 5 weeks, and then rotating back over after the beginning of the year. And of course, mid-February, saw it go down strongly for 4 weeks. We'll continue to keep an eye on gold as, again, we see 2 weeks or into the second week of a sideways slide. Derivative oscillator losing downward momentum. Price percent oscillator still heading down, not quite flat. We look at the 2-day, and of course we called that back on Friday where it crossed over going up. Now what is gold going to do? The last 2 2-day candles, we've seen red, small red, almost doji's indecision as things have been sliding sideways. So maybe we're getting set up for a 2-day recross going back down. Who knows? I'm ready for gold to bottom out and head up, but we've got to see that in the charts. Look what's happening on the half-day chart. Of course, it crossed over going up quite strongly in the morning on Tuesday, the 9th of March, and has been moving up over the last many days. We do see things really cooling off on Tuesday. Hasn't crossed over on the price percent oscillator, but getting awfully close. Derivative oscillator's already gone negative. So we'll keep our eye. We see where price is sitting right there on the weekly trend line. If it's going to cross over that, we'll pay attention and then look at that 2-day also. That's where we are on gold, waiting for it to sort its way out. Lastly, we go to Bitcoin. The big downer for the day, 3.34%. And again, this week, we see a weekly vertical crossover perhaps occurring. Not calling it yet because, of course, it's not Friday afternoon at 4, but getting closer to looking like that. Derivative oscillator gaining some downward momentum. Remember, never call a candle until it's drawn. You can sure get close, though, like we do on Fridays when we have weekly vertical crossovers, and look for a buying point right there at the close of the market for a practice trade. On the 2-day chart, we can see the price percent oscillator slowly pulling away from the red signal line. Derivative oscillator gaining some downward momentum. Green spinning top. Again, we see a wick on the top and bottom, about the same. So again, sideways slide, you'll see more of that as we look. You'll see where it had popped up and then slowly grinding itself over, back recovering from whence it originally started to move up. So that is reflected, of course, in that price percent oscillator on the bigger charts, sideways sliding and then moving over. So that's where we saw the real drop at the end of the day. So again, we had just not enough energy for Bitcoin to cross over, going up so slowly pulling away from that red signal line. And we'll continue to watch and see where Bitcoin's going. And if we have that weekly vertical crossover that, again, might retrace a good pullback for another potential up move in Bitcoin. One thing you know about Bitcoin is it's volatile. I mean, when you look at, we talk about the Bollinger Bands being volatility bands. Well, there you see it, my friends. You can see where Bitcoin for many months was in a tight funnel there. I mean, just a tunnel, not funnel, tunnel. And then when it broke out, when we had that weekly vertical crossover going up back on the week ending the 23rd of October, that is where you see those volatility or Bollinger Bands stretch out with that strong and long up movement. That's where we are as we end the day. So appreciate you being with us. Appreciate our new Patreon members. You want to support the work we do here for free for you, then, of course, Bitcoin. You can send us Bitcoin, but being a Patreon supporter would be most appreciated. And buying a book, got an autographed copy waiting for you. God bless. All the best from the whole team at Charting Wealth World Headquarters.